Hey guys, RC Peck here with Frills Wealth. I've got a price chart up of the S&P 500 divided by the US bond market. So basically, let me just zoom out here a little bit. This is the S&P priced in US bonds, and it gives us an idea of kind of the fight that's going on between these two assets. And I think it's an important price chart because there's really only two places money can go. I mean, let's just really boil this down. Let's boil this down to super simple, not simpler than it needs to be, but just super simple. When people are feeling good about the future, about their future, they put their money in the stock market. When people are concerned or they want to be more conservative or they can't handle the volatility of the market or they're worried about the future, they put their money in the bond market. Now, this price chart is just a price chart of the US stock market versus the US bond market. But the US is the largest stock market on the planet, represents about half of the world's market cap when it comes to stocks. So it's a pretty important stock market. And I have the yellow section on there. That's kind of it's not positive and it's not negative, meaning bonds aren't winning, bonds aren't losing, or stocks aren't winning and stocks aren't losing. And when we're in the yellow area, it's really a no man's land, right? It's not a things are winning, things are losing. It's the market trying to figure out, or hundreds of millions of people trying to figure out what they should do. And all investing is emotional investing. All investing is mindset. All investing is psychology. All investing is behavior. And there's a point in every person's life where they get that that's the whole game, meaning they get that it's entirely a behavioral game. You need to know the ticker symbols. You need to have some logistics taught to you, but the real game is the inner game. And look, that black line is in the yellow area right now, right? It's not going up, it's not going down, it's just kind of in there. Anything above up here, above the yellow area, that is when the stock market is truly outperforming. Anything down below the yellow area is where the stock market is underperforming the bond market. And so if you are bullish on the stock market, you want to see the black line either in the yellow area, in the kind of the tug of war area, but you really want to see it up here. You want to see it moving up, and the stock market versus the bond market did kind of peek its head above water, just like it did back here in 2019, and then 2019 again, and then 2018. So this is a significant resistance to US stocks versus US bonds. And you can see how when it has broken above that, it never sustained it, right? It couldn't sustain it at the end of 18. And then it broke above it again at the end of 19 into 20, and it couldn't sustain it again. And so we have this megaphone, you know, chart pattern here, and it literally can go either way. Now, look, the good news is, let me just zoom out here. I'm going to zoom out to 10 years. The good news is we came into this megaphone with stocks outperforming bonds. Now, there was a period where stocks and bonds went sideways, right? Half of 2015 to the beginning of 2016, right? This little drop down here, that was Trump getting elected. That scared people. But then the US stock market moved higher. Now, this is all a relative price chart. I want to show you, I want to go back to, hold on a second, guys. I want this back button. I'm going to go back to this 3.5 year price chart. So, one thing I'm also noticing, and I've been talking about this for a while, this is a price chart of value. So, value stocks. And we've been taught that value stocks are the safer place to be. And when I talk about mindset, what I'm really talking about is the language you use. I was on a walk, or I was rucking with a friend, and he's like, "What do you mean by mindset?" Because I was telling him that I train people, and one of the biggest lasting changes is really mindset. And he's like, "What do you mean by that?" And I actually had to think about it. I said, "Oh, what makes up mindset or behavior or psychology or emotion?" And the answer is words, the words you tell yourself or the meanings you put to words. So on the screen here is value, and this is a value ETF, right? S&P 500 value ETF is what it's actually called. Its dividend yield is 3%. Let me just see how that is relative to the S&P 500. The S&P is only 1.9%. So not only is this value, but it's giving a higher dividend. So people hear these words like value and dividend, and that creates an experience in their body, right? They've probably been taught that the word value and the word dividend means safe, means I'll be okay, right? And I just told you, and I'm pointing out that the yield on this value ETF is 1 percentage point more. So let's just say the S&P 500 is 2%. This is 3%. So it's 50% higher, right? Those are more words. Oh, I guess I'll be safe. I guess I'll be safe, because these words, you create these words and they make meaning to you. And then you invest your money based on this. But guys, this is old thinking. This is old wiring. I'm going to put up here SPY value, just compared to just the market itself. And let's just look at these two. So SPY, or value, is red. That's right. Now, these price charts include dividends, right? So they include the dividends. And let's just do this latest bull market. So we've been in a bull market. No more, but let's just talk about the bottom of '09. So just the S&P 500 with dividends reinvested, it's gone up about 450%. But value has gone up 300%, not quite 300, or actually just a little over 306%. But there's a missing 150 percentage points. Now, guys, this includes dividends. So this includes the bigger dividend for value. And this is what's lost. And this is all behavior. It's all emotional. It's all psychological. Psychological? It's all about your emotions. This stuff's happening below. You've been taught to get value. You've been taught to get dividend. And yet it's slowing the growth of your money. I'm going to throw another one in here. I'm going to throw in, um, sorry, we were talking value. I'm going to now throw in the dividend in here. And let's do the same thing. Let's just go back in time. We can't quite go back. The SPY dividend's not been around as much, but over this time period, over this, what is this, 5 years, still you have the S&P, up 64%. Value is up 34%, and dividend is up 14%. I guarantee you 9 out of 10 people who are over 50, 9.5 people out of 10 own value and dividend because they were taught that those words make them safer. But I'm showing you here they actually don't, right? What is actually makes you safer is understanding how words create the psychology and the emotion in your body and in your mind, because this is all happening below the surface. And I believe this is going to continue to happen. And this is why people over the age of 50, they have this angst, they have this anxiety going on because they've never been taught to think with their eyes open. And I'm going back to the original price chart I started with. Let's see if I can get back to it. Of just comparing US stocks versus US bonds. And it's a very scary feeling when you're in any of this, because what loads up is uncertainty. And I'll tell you from studying humans, adult humans, for my entire adult life, training people for over 2 decades, is humans don't like uncertainty. We do everything to get certainty, even if that certainty is really bad for our money. This is why people often go 100% to cash. 100% to cash. And I saw a study last week that, oh my gosh, something like a third of people over the age of 60, right? 1 out of 3 people over the age of 60 went 100% cash. 100% cash back in March. Back in March. That means they went 100% to cash back in March. And I don't know where in March. I'm guessing it's near the end. They missed the S&Ps, that they missed this 36% move higher. And they did it because their brain's designed for, survival. And so they go to 100% cash. The problem is when you go 100% cash, there's almost a 100% chance you stay in 100% cash way too long, and it becomes extremely painful. And the problem with 100% cash is the longer you stay in it, the harder it is to get out of it, right? And it's not people's faults. They've never been trained, they've never been taught to actually understand how investing works. And a high IQ doesn't matter, right? If you earned really well, doesn't necessarily matter because growing money is so much different than earning money. So here's the S&P 500. It's not being divided by anything. It's just the normal S&P, and it's still in kind of that mega form or that megaphone looking. And if you're curious about an area that you'd want it to stay above, I would probably say you want, this is SPY, but you want SPY to stay above, the 290, 295. That's the area where once it broke above it here at the end of 2019, it had this huge breakup. And then once it broke below this, it really fell very hard, very fast. And so, as far as kind of break points, and this is something that I train my clients to do, is say, set up a marker, there's much better ways of doing this than what I'm showing you right now, but set up a marker so you don't have to pay attention every hour, every day, every week. Because the stock market doesn't care if you're looking at it every minute, hour, day, or week, but you want to set up a system so something is taking care of it. And so as we move through COVID, as we move through this on the S&P fell 35%. It was as we move through this, and hold on, I'm going to interrupt that thought. This is international ex-US. So this is the rest of the this is the rest of the world minus the US. So the US is not on this price chart at all. And again, what you want to see is you want to see the price get above those two blue horizontal lines that I put up there. That's what because you want to see it get up there and you want to see it test again for those new highs. But you see that it got turned back. It got turned back. Same thing. And there's a reason I'm showing this before I finish my thought. And then here's emerging market. Same idea. It's got to break above and stay above the zone that I'm showing you in the blue horizontal lines. Emerging market didn't even get close to that and it turned back. Right now, the reason I'm showing this is because people are getting sold on the idea of you got to have emerging markets, you got to have international exposure, you got to have value, right? You got to have dividend, and it's actually hurting them. Words create worlds, and they create these worlds inside of us. We all have, you know, we've all had the same stock market the last decade, but people have had very, very different experiences in their life with what's happened with their money. So, guys, I'm super excited. I've started offering my 2K program. It's a do-it-yourself program for 2K. 2K is $2,000, and my guarantee is in the 8 weeks that you take the program, that you create $10,000 of cutting losses, right? So you find all the losses, you cut them, and you replace that with a better investment. Or you just say, oh my God, this was absolutely worth $10,000. You invest the 2K, you have a $10,000 experience. 2K for 10K is what I'm calling this do-it-yourself course. There's information about it at the top of the comments or right under the video. So if you've been looking to get trained, none of these videos are anywhere in the world. They're not on the internet anywhere. They're not on YouTube anywhere. These are videos no one's ever seen. The only people that have seen these are people who have taken my training. So I believe a better life is on the other side of training. It's not on the other side of another newsletter. It's not on the other side of another pick of the month. It's not on the other side of another big box advisor. And you come to this training where you are, and I make sure you get a better life, a better system, a powerfully simple system that has you sleep better. So this is emerging markets, guys. It's not strengthening as much as you'd want it to. I showed you international. Well, I'll just show you international because I showed you international. It's also not as strong as the S&P. A lot of people have been sold that because other countries have handled COVID better, you should have exposure to those countries. And that's just, it's absolute crap. But again, people have not been taught to think with their eyes open. They've not been taught to train and look at price charts, and it's absolutely hurting them. So, guys, let me know what you want me to cover. Please subscribe. That helps. Please give me a little thumbs up because that helps. Let me know what's on your mind. I can jump over to other charts. If you want to look at GE, or if you want to look at gold, or if you want to look at 3M, tell me some things you're thinking of. I know people have been talking about energy. Energy did a huge move higher. It also fell very, very, very hard from the beginning of the year to the bottom of March. It fell gulp. I mean, that's incredible. It fell 60%. That means your $100 dropped to $40. Now it went up 99%. So your $40 went to $80. Okay. And then it fell, and it's falling pretty hard. That means your $80 fell 20. So that's $16. So now it's down to 64. So $100 is still down to $64 from the beginning of this year. That feels like some scary roller coaster. No, thank you. I've talked for a long time how I think the energy sector is going to continue to die and get smaller and smaller. It's not going to go away. It's just going to get smaller and smaller. Same thing with the financial sector. People often say that the financial sector is one of the most important sectors. I disagree. It's done nothing for a decade, and we had one of the best bull markets, or the best runs from the top to bottom, bottom to top. And you might look at this and go, that doesn't look that bad. But if you take this and you divide it by the S&P 500, meaning you price it differently, you get how horrible it's been to be in the financial sector. I really thank you guys for being in my world and watching my videos. Please spread the word. If you like these, let other people know about them. If you like these, let me know what you want me to cover. If you don't like them, let me know what you don't like about them, because I do want to make them better. And I do want to kind of give you that relief. And, guys, the best thing I could ever do for you is to have you go through my training. So if you're on the fence, or if you're curious, or if you're now just hearing about my 2K training, and before all you knew was my group training, which is a $10,000 training, my 10K training, now's your time to check out the 2K for 10K. Thanks, guys, for being in my world. Appreciate it. I think that's it. I'll talk to you soon. I'll talk to you next week. Okay. Bye, guys. Bye.